everyone. Good morning or good afternoon, depending on where you are. This is Otsu. Who else would it be? This is Observations with Otsu. As you can see by the title, I'm going to be discussing the red price action that we have for today, starting Christmas a little early, and some people's halls are getting decked, I guess. So play on words. But in all reality, I do hope that you are safe from these markets. We'll look into that. I think it is normal to lose some money here. It is rational, but also to keep in mind the bigger picture. And so that's going to be the theme for today. Okay, like I'm going to take a look at the market as a whole as far as the redness that we see, the corrections that we see, and analyze that with the bigger picture because a lot of people are even being sarcastic and saying, I got a message from somebody today, an influencer that I work with. He posted basically a bullish chart, and he got a lot of sarcastic comments about that. But a lot of this is going to be relative. Trading is a relative, a dynamic thing, and so we're going to take a look at that and see how can we rationally analyze this. Okay, because it's okay to be upset. It's a rational thing to be upset to lose money. I understand that, and so we'll take a look at that and we'll see what the difference is between that and just being like completely lashing out to someone. And that wasn't really meant to be part of the video, this particular instance from this morning. But what I do want to say is we need to look at how to view things like sub trends within regular trends. That's a big thing that you guys know if you've been around, if you've heard me talk for about 3 months at least, you know that I bring up sub trends. And so we'll look at that. We'll look at the big scope. Yes, the market's doing bad. It was something that I had thought about originally. We went ahead and pumped last week instead. So it did blindside me just slightly, but I still was slightly prepared for it. I lost some positions that I didn't really think that I would lose, and so but I'm not doing terrible by any means. But we'll take a look at this, right? And so I'm right there with you. If you feel like this market is a little sleazy, um, and so we'll take a look at that and we'll see like what should be what should we be mindful for? What are things that we're overreacting to? What are things that are rationally reacting to? So we'll take a look. And so overall, we'll try to look at some targets as well as far as scenarios, and we'll look at the big three for sure: Bitcoin, Ethereum, Solana. And if we have time, we'll look at some other ones. But as far as the theme for today, I will scan some charts as well and just kind of briefly look at how far these things might correct. And so this is something that I mentioned, I believe, 2 weeks ago. Yeah, about 2 weeks ago, I mentioned, a lot of people were thinking that we were going basically going straight vertical, and I had a observations video called "Are we going parabolic soon?" And I left it open ended on the thumbnail, but the general consensus for me was no, not so fast. Let's consider other options first. I didn't say that we were going to go down, but I didn't say that we were going up either, and that's why I had some hesitancy. And so that's one thing, like, and we'll see why things look divergent in nature, et cetera, et cetera. But we'll take a look at that. We'll also take a look at the weekly time frame because that's what observations is for. So that's the introduction. Got a few preliminaries, not much, but we'll keep going. So for preliminaries, there's really not much. I've launched Knowhere Premium. That is something that if you're interested in, it's basically a more advanced paid version of my Knowhere HQ Discord. If you are interested, you can just sign up for Discord, so if you're not in Discord, sign up anyway. It's free. I share a lot of free content. I share more free content than your average paid person. So go ahead and join. I post 5 videos a week. That's usually my showcase for that, and then I post charts and discussions and chart requests on Tuesdays. In addition to that, I got the premium, of course. That's it's only $20 a month right now. It's going to stay $20 till the rest of the year. If you sign up now, you will keep that $20 a month throughout the next year and the year after that, or however long I decide to do this. If you are not signed up by the end of the year, I do raise that. I haven't decided if I'm looking at like $30 a month because it is pretty extensive. And so I am launching with that introductory price to get people in the door and to let you have a good value. It will not go any lower than $20. I just gave away 3 memberships as well. Somebody, a premium member, was generous enough to donate 2 memberships. I went ahead and added a third, so we gave away 3. I do plan on giving out at least 1 or 2 more during the Christmas season. So if that's interested for you and you're not in Discord, just sign up anyway. I'll leave a link in the description. And so it's really, I don't want to say you have to buy there or it's worth it or whatever. It should be worth it. Like I hope it is. And a lot of people give feedback that have joined, but the whole thing is, maybe just try it out if you have an interest in it. It's $20. I mean, that's less than a pizza where I live. And so, anyway, I don't want to dwell too much on that, but that's basically the main and only preliminary. Some other small ones. I will have Aroon bots launching here in a couple weeks. That's the other thing I'm working on. And then in January, I'll have Apex Academy. So I got a lot of stuff going on. And I'm launching quite a few things. And so I'm trying to also be respectful of the holiday season because I know people are busy. I'm busy too. I shouldn't make it hard on myself, but most people have requested this. So anyway, that being said, I think that's pretty much it for the preliminaries. Let's just let's get started. All right, so for today's theme, I want to talk about possible corrections in the market. It's really so the nature of price action during these market stages, and I've kind of been on this theme really for the past 3 weeks or so. If you looked at some of my other videos, for example, 2 weeks ago I said, "Are we going parabolic soon?" And I mentioned this earlier, and the consensus was not so fast. Last week's video was we need to change our view on the market, like our market perception needs to change. That we aren't necessarily going to flash crash or flash pump. It's probably going to be a little bit of both. And so I've seen mixed things in the market overall, or I should say with people in general about the market overall, is that some people think that we are going to go up straight away. Some people think that we are going to retrace down. I think the consensus on CT is that we are just going to pump like crazy. And so because of that, people try to get over leveraged. And, and and leveraged in general, I think, is probably something that you should use sparingly. I think I treat leverage like salt. It should season your food. It should not be your food. You shouldn't, uh, you know, same with sugar or any of that stuff. Like seasoning should be used sparingly instead of being the prime motive for cooking in the first place. You should not be cooking food so you could use salt, for example. It should be you cook food because you want to eat, you add a little salt to taste. And so not the most perfect analogy, but you understand what I'm saying. I mentioned a video in Discord earlier today that most of the time my max leverage is 10x. My average leverage is 10 or less. And sometimes I try to I try not to use leverage, and in my opinion, you should also try not to use it if you can avoid it. Okay, you should always use spot if you have it available. And so it's one of those things where you almost get a habit to trade less effectively if you work with leverage, um, especially knowing that you don't have the money. So, and you shouldn't really use it as you shouldn't use leverage as a way to maximize money that you don't have. You should be using it to minimize your exposure to the market. And so that's how that should work. So anyway, enough of that. But the whole premise of this is to be mindful of markets for now, because the market will uptrend, and we've been in an uptrend, and this is something that I can show you. Like we basically been in an uptrend for all year, really. And so currently on this example, like this is our first, bearish candle, and I would not be surprised if we close bearish, to be honest with you, because we haven't had a bearish candle in 5 weeks. That is a record across the board for the weekly. It does happen, It only tends to happen when we have large uptrends, like so, like from 2020. And so that's something to keep in mind. Like we need to realize that for the most part, markets do behave within the norms. So, for example, black swan events are big deals because they happen very little. They happen based off of the nature that they bring. If we had a black swan every day or every week, it wouldn't be that big of a deal. We would get used to that, right? Same with uptrends. Uptrends do happen, but they don't happen as much as you think that they do, at least in the effect that they do. And I do think a lot of people kind of got a little too excited and euphoric over the recent price action. And what's strange is like, I'm not here to criticize by any means, but where were you guys 6 months ago? Where were you guys, on down at the lows? Where were you guys at 25,000? Those people um are non-existent there, or they're crapping their pants, um and now they're all of a sudden excited. And so I want you to keep in mind that, so if you're viewing me, you're probably viewing me because you've known me on Twitter at some point, right? So I have to mention this in reference to crypto Twitter, CT, whatever it is. Excuse me. And so you should know, I'm not telling you anything you don't know, but 99% of people on crypto Twitter are full of it. Okay? I just saw somebody doing fake P&L charts, um and the guy has basically farmed 9,000 followers, like more followers than I have actually, and is doing that by just faking it. Like literally posting like the most perfect screenshots, that I know as both a trader and as somebody that does marketing, does writing. Like there's a lot of elements at play. Like there's a point to where like the whole idea of like truth is stranger than fiction. The whole idea is that you can manufacture, like, things that are manufactured look manufactured. You can just tell. There's a natural element to you as a person where you can distinguish between what's natural and what's manufactured. And charts can look manufactured. And I see this. And I see it all the time. I see it all the time. And and just recently I've had two instances, in fact, of people trying to scam people using my name. They would modify a handle and try to talk to people. One of them even joined the Discord, and I'm like, get out of here. So it's one of these things. People will try to do that. This is a destitute place. CT is. It's a cesspool. There's a lot of problems out there, and this pertains to this video because a lot of people, and this could be you, are susceptible to listening to noise. Like I've known people that have talked to me and said, "Oh, so you're one of the few rational people," which you should never take for granted, by the way. But they've told me like, "Hey, I've just gotten off Twitter altogether. I don't like." I know people that will not get on Twitter, that I know, because they're just done with the noise. I know people that don't go on Discord for the same reason, actually. But you need to be mindful and master that, right? You should never go to Twitter as a main source of, well, let's see what's going on. And I say that as someone that has honestly been affected myself recently, because I know a lot of good traders. I know traders or non-traders. I know a lot of people, high profile people in this space. And I've worked for a lot of them before. I still work for some other ones that I'm not talking about right now, but there's some that I've very highly respected, but they have a very terrible strike rate. And that's the thing. Some people just suck at trading, even high profile people. And that doesn't necessarily mean that they're scammers. Like you can like what's worse, being a scammer or just being really bad at trading? See what I'm saying? Like some people try to put them together in one pool, and like, that's not necessarily the case, right? Like you can be bad at trading and be an honest trader. So, but that's the thing. A lot of these people will hide under the guise of, because I have a high follower count, for example, or I got two, three, 400. I know I've seen some people as high as 600, 700,000 followers that aren't any better than you, probably. You know, But the thing is, they know how to market themselves, and that's where they hide behind, right? So that's the thing, and that's you should take solace in that, however, because you should not be following these people. It's okay to follow them, of course, but it's one thing like you should not be looking to them to see, well, how should I trade next? You know, develop a mind of your own, develop a system of your own, a strategy of your own, um, exercise risk management, capital management, lots of management. This is a managing game. It's not even a game to me. I hate using that word, but that's why I'm so against people that use like Rollbit. Or I'm not against people, but I'm so against tools like gambling based thing. I do not like the gambling culture because it breeds a consistency of loss. And so, yes, there's always going to be that guy that says, "Hey, I've gambled for 10 years. I've made it. I've seen other people make it. Hey, that's great. Okay, if you made it, that's great, but for every one person there's going to be 10,000 that haven't. Like what about the people that I've personally know that have basically lost their entire lives because they have gambled their lives, and you might say, "Well, that's because it's an addiction, blah blah blah." Well, agree. I agree with that, but at the same time, I'm not going to be associated with something that focuses on the culture of that, okay? It's the same reason why I'm okay, like I'm perfectly okay with alcohol and drinking alcohol. I'm not okay with the bar culture, and that's the same reason. And because some of you guys, I can already tell through the screen. Some of you guys will say, "Well, trading is gambling." Well, first of all, no, it's not. And second of all, if you view trading as gambling, you're just viewing gambling in whatever lens you want it to be, right? And so it's not that you think trading is gambling per se. It's you just treat trading as gambling. You don't have to gamble while you trade. And it's just like driving recklessly is gambling with your life. But driving safely, I mean, technically, is that a gamble? It just depends on what you consider gambling and risk. Because life is a risk, but then everything's a gamble. Walking out the door is a gamble because I could get hit by a car. Or staying inside is a gamble because I could get carbon monoxide. Or wasting my life is a gamble. Or trying to start a new business is a gamble. Like if you think that way, then everything is a gamble, and that doesn't make sense. But then nothing is a gamble because everything is. See what I'm saying? You got to twist that and turn it around the other way. So if you're viewing trading as gambling, that says something more about you than it does about trading. So again, if you want to gamble, that's on you. I'm not telling you or anybody what to do, right? That's not where I didn't even plan to talk about gambling today. But the thing is, you don't have to push that on other people as well. So anyway, that pertains to the current video because we are seeing an increase of red days and we need to stay cautious. Okay, because right now is not the time to increase your leverage. Right now is the time to stay focused, understand the market conditions, right? So one thing we can see here on the daily is that we had this continuation pattern. I've said that we need to reclaim this. We basically need to be green for the day. I think we can actually manage that perhaps. Excuse me. So we'll see how that goes. But overall, this is starting to look more corrective in nature, and we need to be mindful of that. The whole image of Aroon is like, all right, so we have a trend. This blue line is a bullish trend, but then we have a bearish consolidation based off of how the bullish trend and the bearish trend are going down. And so basically, it's like, if an airplane is at 36,000 feet and you have another airplane at 10,000 feet, well, which one's going to hit the ground first? Well, it's going to be the one at 10,000, hopefully. But from looking at it from another perspective, the one that's at 36,000 feet has a longer time to go down, and so it's going to have a much larger effect, right? So that's the same with the bullish trend. What's happening here is the bullish trend is going down and the bearish trend is going down, but the bullish trend has more to lose in this particular case. And so that's where the subtrend comes into play. And so I don't want to get too much into detail because it's really deep. But overall, what you need to know is that the markets can correct in a bull trend and they can stay bullish. It's perfectly normal. My biggest consideration would be, again, not to be reactive to the markets, but to be preemptive to the markets. I've said this probably at least 5 times this year, and I've said this a couple times in different videos. I've said this in a tweet multiple times that you should look for a move. And so, for example, here you should be mindful that we had this larger divergence on the higher time frames. You should be starting to build a position there in anticipation of something happening, right? Versus saying, all right, we've broken out. I'm going to add here. Yes, you would have been in profit, but you would be struggling for the past month. And the thing is, yes, you'll be in profits here. Well, I think we're going to go up. Oh, this is a dip. I'm going to buy more. This is okay. Great. I'm going to buy more. It's a dip. I'm going to buy more. And so now you're stuck, right? So that's the thing. Like you can get chopped up really easily. And the worst thing that you should do, the worst thing that you can do is lose money in a very highly profitable bullish market. So don't lose sight of the bigger picture. That's why I focus on Darvas boxes so much, because Darvas boxes assume Darvas boxes are basically consolidation breakouts, right? So it would be like longing at this particular signal right here, and then putting your stop here. So we would have to go to basically 38,000, almost 39,000 before I could long this. And you might say, Otsu, well, you're losing out on like 5%, right? Like it's going to move up, and I'm already excited by now. And why are you just now entering? Well, the thing is, you don't know, right? And so yes, that might particularly work in that hypothetical example, but in reality, that doesn't happen too much. Breakouts tend to be, as far as like high time frame breakouts, like you know, you can still be preemptive to that, of course. So that's one thing to keep in mind overall. So long story short, be mindful of this correction. I can go through some of these here. But I mean, some of these are correcting. Like Soul isn't doing too bad considering what's been taking place. We'll go into that in a second. But you got like Adam. A lot of these are correcting pretty strongly. Like 7% is no small day by any means. But look at this. We had a bearish divergence. Like how easy is that to identify? You need to stop focusing on people on crypto Twitter, especially that are telling you to long on divergences, okay? That just needs to freaking stop. It needs to stop, okay? Because, and again, I'm not trying to offend anybody, but if that happens a few different times, that's on them. That's their fault. If you start to do it yourself like 10, 15, 20 times, that's on you. That's your fault, okay? And you can correct that. It's okay. Everybody makes mistakes. And I still make mistakes. But you always need to improve. So stop listening to people that tell you to long divergences. That's really, really stupid. And so anyway, we had something like this. This was the position in premium. It got rejected, but it's still above profit. So we're still working with that, right? And so you got other things here, like near, broke inside the range. I think I had some bullcrap ETF rumor or something like that, but broke inside the range. That's no good anymore, right? It got invalidated. And so you have these corrections that are going on, but they're not necessarily super corrective. So that's what you need to keep in mind. These swings are pretty considerable. Like it was normal for Bitcoin to swing down 20, even 30% in some cases during the bear market or bull market. And you need to be mindful of that because that can happen. And if you're 5x, even if you're or if you're 20x or you're even 10x, that will screw you over. Okay? And so that's why staying in the spot, buying dips are much more beneficial in that regard. Like you have AVAX here that just lost the range. And I wasn't in AVAX. That was more of a thought after the fact that didn't happen. But you see what I'm saying? Like we are losing some of these levels. Some of these are losing levels. Like here's another one. And that's worth keeping in mind that you want to monitor these levels to make sure that they are reclaiming. And so, anyway, I digress a little bit because yeah, I'm just taking too long, I guess, to talk about this. But overall, be mindful how the market behaves because the market will not be, the market will very rarely be generous to you or forgiving to you, especially if you're adding on the leverage. It's one thing, if you're in spot or whatever. I mean, and there is a different attitude. Like spot helps you discern the market a little bit better because when you start adding leverage, you start adding risk, which adds your emotions, which adds more complications. You got to remember all your positions. Then you freak out when something goes bad. Even I've had this even personally where the market has dropped significantly, but my positions are okay, or they're only slightly red, and then I freak out, and it's just like you can't do that either, right? So um, you got to be mindful of all that, right? So the market is look like it's starting to correct a little bit, and so that's another thing. Just because the market goes flat down in one day doesn't mean it can't correct the next day. And so Bitcoin is a good example of that. Like, some of you guys, like, people have been in buy the dip mode, which is not a terrible idea necessarily, but it's like we rally here, okay, then we dump, and then we rally, and we dump, and it's just like you don't know what you're doing. And that was the big thing with the weekly. Like we dumped from here, everybody thought the bear market was starting to begin, right? Well, then we rallied, and then everybody's like, "All right, bull market's back on." Well, this was a clear deviation. Like this was a clear sign that you should get out of the markets. So this happens all the time. So we had a rounded top here. We went ahead and extended, rejected. So we went back below the range. And so that was your range deviation. And so we would go down here. We actually did the same thing again here. So we had the swing up, we had the rejection, doing it all again. And so now we have the same thing here where we went up, we have not rejected. And I don't think that we will necessarily. But that's something that we need to keep in mind also with like the daily. And so we have not rejected necessarily. We keep having a string of higher highs, and so that is good. But we also have a divergence, so we need to be mindful of that. That needs to still play out. And so, actually, I think the divergence did technically play out, but this is still divergent in nature. We also have the rejection at the highs, so that is something to keep in mind. So far, no permanent damage has been done, and that was what prompted my video is to make sure you understand the terms and conditions to trading a market that's 24/7, okay? And knowing that if you're using leverage at a time where you probably shouldn't. Also during a market that's 24/7, and there's other complications with that, right? Don't make this, I guess to summarize, don't make this too hard on yourself. Make this as easy as possible. Don't overexpose, don't over leverage, don't overthink either. Focus on trends, focus on preemptive trades if possible, and focus on taking profits and also know the difference between making swing trades to take profits and holding positions for a year or two. And that's another thing because people get confused. Even if people are long, like let's say they bought Solana at $10 and they want to sell right now. Well, why? Give me a reason why. I'm not saying that you shouldn't. I said just give me, if you have a good reason, then yes, you should take profits. But just make sure you know the answer to that. Okay? Because if you're just looking at the number and like, oh, the number's too high, I'm gonna take profits. Well, okay, well the market keeps going up, and then you lose that extra, or you don't take profits and it goes down. And it can go both ways, and I've had it go both ways. I've done some really stupid things before. So just keep that overall in mind. So anyway, that's the theme of this video. Let's get into the technicals. We're going to start with Bitcoin. All right, so we're going to go to Bitcoin first. You can see that the market is trying to correct a little bit, so that's a good sign. I hope that is the case. I do like green better than I like red in this particular case. So let's get started here. On the weekly, we had a bullish week, but just barely had a big strong wick candle there, so that's pretty good. As far as the Aroon, we had the wide bullish consolidation, and it well, it's not confirmed yet. I'm sorry, I kind of hesitated a second. So we had the full trend, and so what happened was is now we went to a new candle, and so this week could start the bullish consolidation trend. So when you have a full trend like this, that stays basically stays horizontal, but the other one goes diagonal, that isn't really a sign of anything other than the trend for the upward trend is strong. So the bullish trend has been strong, and that's been the case. And so you can see part of what I was talking about earlier in this video is that yes, we've had a strong bull trend, but we also had these big wicks. So there's a lot of noise on lower time frames, right? So like this is very noisy, right? But if you look on the weekly, it looks pretty good. So that's where you need to be mindful, right? Be mindful of where you are in the market, where you are taking positions, where you're adding or not adding leverage, and where you're buying dips, things like that. Because so far, things are much less noisy on the weekly. Now, as far as this current week, we do have a bearish candle, which tends to be the case for most cases. You can see here, based off of the entry, we had a very strong bearish week and then a rejection. Same here, very strong bearish beginning of the week, rejection. So now we're doing the same thing. So we don't know how this week is going to end. That's one thing I tend to mention in observations videos. We have 6 more days to go, so just be mindful of that. RSI is at 73% and it is going down. If it goes down below 70, then I think it's time for more of a corrective approach. So far, things are going okay. And so there is turbulence, so to speak, but things are still looking healthy. I'm just going to get rid of this. I'm not really sure. It's just bothering me. So so that's looking good overall. I'm just going to get rid of these two. All right, so nothing we need to keep in mind. So this particular position, this is on the daily, but we still have this on the weekly. The weekly still looks very strong overall. I don't think there's any particular considerations for the weekly. Another thing we can look at here is this fib block. If we stretch it over like so, we are still above the 50% marker, which is at 35,400. If we stay, as long as we stay above 35,400, I think that we're completely okay. The bullish thesis is still intact. There's no danger in that regard. The issue is, again, people are over leveraged, people are consumed about the lower time frames. This is not a time to focus on that. It is a time to stay focused, stay higher time frame. Yes, you will lose some money, but in the end, you're playing the long game for this one, right? Like you should not be in the trenches day in, day out necessarily. And so and even for some of my premium members, to be completely honest, like I give roughly 3 to 5 chart ideas a day. So I give roughly, let's say, like 15 a week, right? I don't tell anyone to buy these things, okay? I don't even necessarily say that I do. I just throw opportunities that I see that look good. A lot of them do really good. I mentioned one last week about Blur. Blur went up 71%, and we were able to rack up that 71% on there. And so that wasn't it. That was the aftermarket thought, but this was the position here, right? And so I don't remember exactly the criteria. I can't really show it to you just yet, but it was something like so. And so I got out shortly before here. It was 71%, and I did that because, well, this was before the Binance listing, but part of the reason it pumped was because of that listing, and so it was one of those things. We were at the right place at the right time. I don't remember. I think it was the break of this. Yeah, yeah. So we broke above here. I longed this. I think my stop was, I don't remember exactly where the stop was, probably like right here. Again, I can't show it to you right now, but I'm trying to recreate this. And then it went up 71%. And so that I think I sold right at this candle. So it wasn't 73. I think I sold just slightly early, but that's the thing. It was based off of my Apex rules, and so that's where that came at. So it was a really good trade. It was a solid like 4 trade or whatever. So that was really really good. Um, Not every trade's going to be like that, however, and so you need to keep that in mind, right? So, um, and the best way to keep mindful of that is to understand your risk and everything else involved. So that's that's the weekly time frame, and just to know like the weekly time frame is going to be more smooth. It's going to be more settled, and should be more comfortable as well. So going on to the daily. If we have the current breakdown back into the consolidation block, we do not want this. We do not want to close inside this range. It needs to probably close above 32,300, so it's very close, but not just yet. It probably basically needs to close in the green, is what I've been kind of saying. We also have the trend line down here that matches that consolidation pattern. And so this lower line we do not want to cross. If that crosses, now we're in danger of this 35.4, which still technically is valid. And so we could even see a break and then bounce above there. We'll see how that goes. There's a lot of scenarios, right? We could retest above this. We could close inside the range. If we close inside above the range, I'm going to close a lot of my positions because I think, one, they are more at risk for some downtrend, but two, they are reset, so I can re-add them later. And so that would be anticipation for the 35,400. If we break back to this consolidation range, I do think we visit 35,400. AO is looking pretty divergent in nature, as is the RSI. The Aroon is a very wide bearish consolidation to kind of go along with it. Everything right now is pointing that we will go back down to 35,400. If that breaks, we're going back down to 31,200 or 31,700, I should say. 32,000, I meant to say. So that is the picture. So things are looking okay for the rest of the day. Like I don't want to stay too long because things are going to go up for the rest of the day, but I'm not that's not what I'm saying at all. But what I am saying is we might the worst might be over for the rest of the day, and the market does close in 6.5 hours. So just be mindful of that. So that's basically the daily. That's the scenarios involved. Let's go to Ethereum. All right, going on to Ethereum, going on the weekly, biggest thing here, like I'm kind of tired of just talking about Ethereum because it doesn't do anything, right? So like the biggest picture with Ethereum is that we still haven't broken this resistance that I've talked about for almost a year now. Like I've literally just like stared at the same chart with the same pattern for almost a year. And so things were looking great with the Ab and Eve pattern, and I focused on this pretty much ever since then. A small downtrend to, or bigger down, decent downtrend so far this week, but we have 6 days to go. Had a pretty decent bullish week last week, but we have not broke that resistance point. So that's one thing we need to keep in mind. So if you go on the daily for just a second, we had this rejection right here at 2140. I've been obsessed with the 2140 range. If you're in Discord, you know that I talk about this range. I'm obsessed with 2140. That is the real resistance. It is not $2,000 like most people believe. But what I want you to see here is that we had this resistance point on here, but on the weekly, that was actually from the last week's candle. So we had a weekly rejection. And so this was actually above almost every single candle except for this one. So this doesn't quite count as like a swing failure pattern, but it has that nature to it. So I want that to keep in mind because I'm not necessarily sure that we will clear this range or not. A lot of people are anticipating this. And again, what did I say earlier? Simplify this. What's the best way to simplify it? Wait for a move above the range. That's why I got this alert right here. Set your alert that it'll close above this range, and then you can long it from there. This is one of the rare cases where it's okay to not be preemptive, because people have actually tried to be preemptive for this and have failed. And we've been in this range for a long time. And a lot of other coins have as well. Even Solana, if you go here for a second, yes, it's had a big uptrend, but as far as the yearly goes, from last, I mean, we're basically ranging from last May. And so, I mean, I'm kind of stretching the truth a little bit on that, but I'm saying that for a visual cue to see, like, a lot of these coins have not performed as much as you think they have. They've performed really good off the lows, is what I mean to say, but not so much from year to year, where Bitcoin from year to year has gone up significantly higher um, from its lows. So see what I'm saying? So that's why people wonder why I have such a big stack in Bitcoin, which like a third of my entire portfolio is Bitcoin. Well, that's one reason why. It has most of the upside benefits without very little downsides. Like it's only down 1% for the day where everybody else is freaking out over their coins. And so, and again, that's understandable, but at the same time, that's why you hedge the market. At the end of the day, you want to focus on how much Bitcoin you might have with that. And so that's just something to keep in mind. So with the weekly, We're stuck in this ascending triangle. It needs to break through. 2140 is the number to break on the weekly. So that's a big thing. It needs to break. It needs to break on the weekly. And so we have a slim bearish consolidation to kind of put us in perspective that, hey, we could get some downside first. We don't have the strength. The bulls don't have enough strength to make it through this. So we need to brace ourselves just in case. RSI is down to 60, so it's been reduced. In that regard, we actually had a bearish divergence as well, which a lot of people didn't pick up on. I mean, so that's basically the weekly. I'm not impressed at Ethereum. It's my smallest big bag. Like that doesn't sound right. It's the smallest bag that I have that I'm holding for long term spot. I'm not holding very much of it actually. I'm holding yeah, I can't tell you obviously, but I'm not holding very much of it basically because it hasn't performed well. Once it goes above the 2140, I do plan to go and bid higher. If it goes down below this range, I plan to bid more, but I'd much rather buy something like Bitcoin or Solana, either one of them, because even if Bitcoin doesn't move as much, it still has that hedge, right? And then if I want to buy more higher potential, I'll just buy Solana. And I think a lot of people, if they're honest, are probably unintentionally doing this. They're buying either Bitcoin because it's Bitcoin, or they're buying Solana because that has upside potential. And so a lot of people, I think, are kind of stuck with Ethereum. I have a big Solana video that I mentioned earlier this yesterday. I posted it for the members channel. Um, a comprehensive over an hour view of Solana. I'm going to do some more details in that in the future, but I think basically part of the section was basically sharing how Solana has basically all the upside of a typical value investing stock versus Ethereum. Ethereum has matured, Solana has not. Solana has more upside potential. And with all the visual cues of what Ethereum probably is right now. So anyway, there's just something to keep in mind. So going on to the daily, and we see this drop down. We're still within this slope here. The slope's pretty high, so I do think this could come down. If this comes down, we could go to 1850 is kind of my range for this. So we're technically in a range between the highs of 2140 and lows of 1850. And so I'm not interested in doing anything until we get to 2140 to the upside or 1850 to the downside. And that's basically it. Got a very wide bearish consolidation here on Aroon. Getting ready to approach the 50 RSI on that. Everything else is just kind of like a stalemate. Ethereum's very boring to me, to be honest with you, and so I hope that changes. But those are my two targets: 2140 and 1850. So let's go on to Solana now, and then we'll round out this video. All right, going to Solana on the weekly. So we close our first bearish week. That's the first thing that you need to know. And that's worth mentioning because we probably we had like what 5 candles in a row. So again, typically when you get to like 5 candles, you're starting to stretch it a little bit. It can go farther, but typically not unless it's an extended bull run. So that's something to keep in mind. So we had our first bullish week, and that's understandable. That's normal in these conditions. It has ran up pretty significantly. And so the problem is when things run up significantly, you get used to that. And so now you have more of an impact on when things drop, right? You're like, oh my gosh, it's dropping. And, and the problem is you probably didn't get lower. You probably didn't buy in lower. You probably bought in somewhere in the middle, like, because most people will, right? That's just the law of averages. So you bought in here when it already pumped up 127%. It went up to like 230%, and now it's down here. And so now it went back basically to its 200% range. And so the thing is, if you bought up here, let's just say right here at 65, well, you're already down 17%, right? And so that's not very fortunate. And so that's why I emphasize so much on buying. I bought at 19, and so that's why I emphasize buying so low, and that's why most of my premise is buying at bottoms. Like I don't necessarily try like I do try to look for tops and bottoms. I do. For macro for higher time frame, absolutely. And I think everybody should. And the reason why people don't is people will tell you not to look for tops and bottoms, and it's only because they can't find it. That's the thing. You need to look for them, in my opinion. Or and what I say is there's a difference between trying to pinpoint it versus gauging the general consensus behind that, right? And so that's something I want people to keep in mind. Like you can buy relatively close to the bottom. It is not that hard to buy within 10% of the bottom. It isn't. You just need to figure out where to look. And so a lot of people will try to tell you, well, you there's no point in trying to do it because you can't do it. Well, that's why you can't do it is because you are being discouraged from looking for it. Now, there is a difference between doing that and being obsessed about it. Like you need to find a casual way to approach it. Look for a general range. And so one thing here is like you had I think you had a divergence down this time frame, but another one I'd have to check here. But um, so it's one of these things where it depends. Like a lot of times, there's a high time frame divergence, or it's gone down so much. You know, like the 85% rule. So this had already gone down 96%. So it's not going to go down much more. Yes, it could go half of that, of course. But the thing is, once an asset like Solana goes down 90%, it's time to start scaling in my opinion. And because you know those coins are probably going to go higher, and so Bitcoin I think went down like 70% from its closing candle. Yeah, so once you get down below 70s, like you know that there's an 85% rule typically for Bitcoin. And so most people were going to buy right here at 85,000. And so it was front ran or whatever. So that's what you need to keep in mind. And so I did kind of front run this, I probably, but I also had a high time frame divergence as well. So, and that's something to keep in mind. Like people miss high time frame divergences. It's crazy how people do not pay attention to divergences. They're one of the easiest cues that you can have. It's a sign. It's a sign to get out of the markets or de-risk or to not use leverage or to buy in or to scale and ladder and whatever you need to do. It's a sign to change your view on the momentum because the momentum is changing. Okay, that's what it's there for. And so so we were up 216% from the highs. Now we're down about 180%. So or down to 180% gains from that 19 marker. So we're still doing relatively good. It's just this is a normal correction, right? So if you look at this from a fib standpoint, I mean we're not even at the halfway marker to $40, right? And so I hope we don't go down to $40. I don't think that we will, but we could. And that's understandable if we do. And so one aspect here on the weekly is that you have this liquidity zone, and that's one reason I kept this in mind. And guess what? Top of that's $48. So that's why I mentioned $48. It's the top of the liquidity channel. Once you get to a liquidity channel, it becomes harder to break through that. And so typically that's where reverses occur. And so that's basically the weekly. We do have a bearish consolidation on the trend that needs to change. The RSI is relatively high at 72, 73. So that's also high as well. And so it's looking okay. Again, nothing's not happening that's strange. So going on the daily, excuse me. So we had a break above this on the 4 hour. It seems like it's failed thus far. But one thing that we can see through here is that we had this trend line, and that seems to be broken so far. We still have 6 hours to go, so this needs to claim above 56, and so was that like 4%? So this basically needs to close at about 1 to 2% negative today by the end of the day to keep this up. If this doesn't, you're probably going to get your $48, or you might get a fake out, which does occur. Very slim bearish consolidation. So what that typically means is we do get more of a wick scenario. So we could very well go to 48 as a wick, and then that would come straight back up. So you could front run that by buying $50, and that's probably what I plan to do. You also got the 50 bounce on the RSI. So there's a lot of confluence in there to where we could get a bounce pretty soon. This could drop another $2 to $5 and then bounce from there. And so that's keep in mind that this double bottom is at 51 roughly. So I think that we will get to at least in the high 40s. And yeah, it could bounce. So anyway, That's basically Solana, and I don't think right now I don't have any upside targets. It would have to break above 66, in my opinion, to try to long this. And the Aroon is still bullish on here, but I believe it's no, it just turned bullish on the 12-hour too. So that is also a good sign that we could get one more wick down and bounce back up. I am a little optimistic on Solana, despite the fact that it's down more than most coins right now. So anyway, that's the end of the video. I hope you enjoyed this. I hope it wasn't too long. Let me know if you have any questions or concerns. But the basic summary is don't get too chopped up. It seems like I'm kind of repetitive over these videos, but don't chop yourselves up. Don't lend yourself to the market. Let the market come to you. And then you can analyze that and make proper positions. You can make comfortable positions. The idea is you don't, it's okay to increase or decrease your risk, but it's not okay to do so where you're uncomfortable. Make sure you're not falling victim to the market. Take what you can. Sometimes that means writing things out. Sometimes that means taking profits right away. You got to know the difference. You got to know the assets, understand the nature and the conditions of the market, and that should give you a huge advantage. So, anyway, that's the video. I hope you enjoyed it. Let me know if you have any questions, comments, like, subscribe if you enjoyed this, and I'll see you next time. Thank you.